Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market moved solidly upward in the last week, mostly disregarding any of the potential negatives around the trade war. It seemed pretty clear that investors love the fact that President Trump uses hardball tactics. Proof came when he threatened to leave NATO, and then the partners fell in line, agreeing to come up with their share of the costs. The president also warned that there was going to be $200 billion more in tariffs against China, and that brought a brief scare as the market tried to go to the downside. And China's response was really tepid, saying that, well, that opens the doors for other trading partners with China, and they certainly might try to take advantage of that situation. But overall, it didn't sound like the big threat of retaliation that the markets had expected, and that helped the market get its footing again, moving to the upside. While the trade war may bring volatility, until we start to hear that earnings are negatively affected by this trade war, then we're probably not going to see a lot of downside movement in the markets that do hold. That remains to be seen how long that will last. And here we are in the beginning of earnings season, and I think it's a little early for companies to be able to tell whether or not it has a major effect on their earnings. But between now and next quarter, we certainly could start to get some warnings out there if this trade war does continue. Our work has shown that there was downside risk in the stock market until mid-July. That yielded a mere 100 points on the downside in the S&P 500, less than 4% in a dip. That shows incredible strength in the market, and the Russell, the low caps stocks, really led the way in giving support to the market. That seems to be changing a bit now, but we're getting some of the higher cap leaders taking over, and that has brought other support as there's a rotation going on in the stock market. So now that time really has passed for the correction that we were looking for, and we've entered into a favorable period that we think will be through this middle period of July through potentially into September. Outside of October, we don't think it will actually last that long. Short-term view that we're going to do at the end of the show shows favorable formations on the charts. And just a word of caution that we think that this summer rally, when it ends, and we think it'll end kind of abruptly, may be right around the point where we get those warnings from companies about negatively affected earnings, and also as we face the midterms, and we see what type of gains the Democrats are going to get, which traditionally they would be gaining a lot of seats. So for now, based on what we're seeing, we see new highs coming in the stock market, and we're going to maintain a somewhat bullish bias here until the market tells us otherwise. Let's take a look at the 60-minute chart of the S&P 500, which you can see right here. The gray area is the area of the overnight trading, which certainly a lot happens overnight these days. And then the white area is the normal pit trading. What happened on Sunday? Well, it was like, what trade war? Everybody was thinking that, well, they could already see the end of the trade war, and we got a rally that started Sunday night all the way through Monday. We had a good up day on Monday. There was some news that came overnight here on Brexit turmoil, and Prime Minister May may be in trouble, and that got the market softer after an attempted rally. And then we had a choppy day here on Tuesday. Late in the day, President Trump came out with his list of 200 billion more of products that will have China tariffs on them, and the market got hammered overnight. You can see that. And then all of a sudden the news came out that China was considering retaliation on tariffs, and that it may actually not be anything that significant, because later on came the news that, well, they were looking to use that as an opportunity to build other trade partners. Wednesday, you can see that the market tried to rally and then failed. There was a report in here that that sovereign wealth funds were strongly cutting equity exposure over the next 3 years, and that also was due to the trade war, and a report that foreign investment in the U.S. had dropped sharply in 2017. That's an old report, but the markets didn't really like that. And oil plunged on that day. Oil down $3.46, a loss of $4.66 on the tariffs and the fact that Saudi is pumping plenty of oil. So that got the big break in oil that we were actually looking for. Here's where that China strategy shift came, where they were going to woo more trading partners versus a potential big tariff response. And the NATO members got in line right over here, where the president's strategy apparently worked. On Thursday, Mnuchin came out and said that China talks basically were broken down, but the door is still open to further talks. And he says, I don't really think we're in a trade war. What exactly would you call this when it's a tit-for-tat tariff thing going on? And then Speaker Ryan came out and he says he doubts that Congress will act to stop the tariffs. Friday, we got a rally overnight that failed as we got news out that bank earnings were mostly showing weakness in revenues. The banks have been very weak, and it's going to be hard to get much of a rally going in the stock market without the financials actually getting some traction on the upside. And then the Fed semi-annual report came out, and they said gradual rate hikes still, higher inflation still, stronger labor market still, and that asset prices were elevated. We had a rally going here on Friday, and when that report came out, a little bit of chop came in, and the market essentially stopped moving towards the upside. So that's a look at what happened and all of the background news that caused some movement in the markets this week. Stock market for the week up strongly, with the S&P 500 up some 1.5%, the Dow almost 2% right now, with a couple hours left to go in the trading session. NASDAQ a little better than 2%, but the Russell, which had been the leader on the upside, is actually small down on the week. So we're getting this rotation, things starting to change. Bond market 30 years down just a little bit, a few ticks to the downside, yields basically little changed on the week. Dollar strength returned. We thought that was going to come in a week, and that messed with us on our short-term view, because if the dollar was softer into this week as a final decline as we expected, it probably would have had gold bouncing further up than we thought that it would have, and we would have got a little more upside in the euro that we were looking for. So our short-term view, the record for the week, was not great, and it was really about the return of strength that we expected in the dollar coming just a week earlier than we expected. That did move the gold and metals markets to the downside, and that is some bad patterns that we're seeing in gold. We did a very important video on Thursday for our members that you'll really want to see, where we looked at the metals markets, a massive breakdown that we see in copper, and the metal stocks and material stocks and gold stocks. I mean, it was a pretty broad video. And then compared that to what weakness in the commodity markets that we're seeing right now means for interest rates. So it was kind of a projection on interest rates also. I think it's a valuable video, and you're going to want to see that. That's for our level 2 and higher members. So if you're not a premium member, make sure you write me about a special, and then you'll be able to watch that video. So the gold market, and oil market joined it on the downside as the Saudis pumping plenty of oil. There is plenty of oil in this world, and outside of some extreme situation of geopolitical problems, oil is in trouble, and we think oil is going to have a pretty bad summer or fall time period as far as the intermediate analysis goes. Oil down about 280 on the week, and it goes through minor supports and now comes down, and I'll show you touches in intermediate support, but we think oil has topped right now, and we were looking for a top in the oil market. That is the opening segment for the week, and of course, as we always do, we're going to bring you our best and worst stocks for the week. All right, best stocks for the week. We bring you patterns that we think are favorable and stocks that have had big moves and some big upside news. And a stock that I would say is just in the beginning of an upward move but hit some resistance is Fastenal. Man, this is in the building material category. Normally, when we get a pattern in here that is what we call negatively configured, in other words, this low right over here that was perfectly in place actually comes at a lower level than the previous low, which was right over here. So you could see the cycles. These are the ideal cycles on the bottom right there, which are measure the, if it was perfectly the distance between each of the lows, and you can see the low right over here is just a little bit off. The low right over here is perfect. So these are the cyclical rhythms in the market, or the heartbeat in the market. And a low was due right over here, declining phase ending, rally phase beginning, and it brings you this huge upside move. Friday was the big surge as analysts upgrade the stock on a big earnings report, and this is actually week 1, we call it. In other words, that's the first week of the advance. We see this first week up as an unlikely time for it to peak, though it came right up to that resistance level at the 78.6%. We think that if it pulls back in here, it will then try to move to the upside again. So good earnings, analysts liked it, and the stock got a good surge. Red Hat is the next one we're going to look at, RHT, in the cloud category. Now, this stock came down and touched that major 78.6% right over there. That actually is an intermediate 78.6%. So we're just going to edit that right in front of you so this doesn't give you bad information. And there's your intermediate 78.6. That's breaks below the major 38, and you can see that would be a spot that we would see as the support. Now, I want you also to notice that this is the point where the downside decline should have ended time-wise and the next rally beginning. We believe that this is the resistance zone and that we're going to get an upside move. No news in this in Red Hat. Part of the reason that we think that this is going to move again to the downside, and you can see our projections in here, is the daily chart. And you can see in here that it has this massive downside gap right there. And now coming up, the slim ribbon is in negative momentum, and as it gets up into that resistance zone on the weekly, as you could see right in here, that's really a place where we expect that it's going to roll over. Some people look at, I'm going to go back to the daily chart, at gaps like this and say, well, it's got to close the gap. Well, it could close the gap 3 years from now. So I don't, really buy that type of analysis. If anything, I think that this stock is going to fail, as it had a good 8% gain on the upside. The next one we're going to look at is in the airline category. Now, I want you to note that this low right over here came lower than this low, so we had this negative configure. It also bottomed a little bit on the early side. That tends to be bullish when a stock does that. So again, we're only 2 weeks into this advance. It's in this minor resistance zone right there. We think at worst case it's going to get up here to about 43, 43 and a half. And overall, some of these airline stocks are looking better to us and at a bottoming point. So analysts have upgraded this stock. The earnings are coming out on July 26th. And we think that a pretty significant trading bottom is in place, and also for the other airlines. United Airlines up a small amount this week, and we think that pattern is excellent. And that's United Airlines. And American Airlines down 5% on the week, and we think it's in a buy area. So if you wanted to be aggressive and you wanted to nibble, I think that those stocks, and I'm not going to show you those because I want to save that for our members, are in locations where we think that they are quite buyable. American and United. United is having one of the best patterns actually in the whole group based on our work, cycle analysis. Next thing we're going to look at is Micron, MU. Micron has been in the news and has been part of this China trade war where China says, well, they're just not going to buy Micron chips. The stock got hit and now is bouncing, and there's some really interesting patterns going on in here, and we think that it's in a bounce right now, but there's risk. Actually risk here all the way out to September. So if you look at the smaller patterns in here, you can see that there's a pattern right here. That's all kind of the 1/3 of this cycle. And then you could see 1/3 of the cycle right there. Pretty nice, right? And then another 1/3 right in here. Beautiful. And then the next rally. So in other words, decline, rally, and then decline. And when you get into periods where you get a nesting, in other words, the dominant and minor cycle coming to the same point, you get good declines, as you could see right in here and right in here. So that's why we think this rally is going to fail, and that Micron, even though we have loved the stock and it's on our best for the year list, is likely to pull back to around $45 or $46. Yeah, that's a 20%-ish type decline, so we think there is risk in here in Micron. Amazon, AMZN, up about 5% on the week. This has our colored phasing in there. It's reached the fib extensions right there, the lower ones. You can see the positive pattern as, again, the bottom is the ideal cycles right over here, and the top lines is how the cycles actually resolve themselves. And you can see this upward trend going on right in here. And then this last rally, right, well, maybe it is the last rally, 2 weeks of that advance. 2 weeks is kind of short for it to peak. As a matter of fact, you could see this was 2.5 months up, this was 3 months up, this was some 3 months up, and here we are just 2 weeks up. So that gives you a sense for the fact how early this is in this next upward thrust that we're seeing in there. And this stock could very easily be up to 1850, up to that projection over 1900 here in coming weeks. It's part of why, you know, we have a little more bullish outlook at the markets, because a lot of these stocks have bottomed right with the market and are moving up. So there's certainly no reason to be very negative when you see this type of thing going on. But, you know, occasionally you can be negative about some stocks. We think defense spending is going to have a hard time being increased in this world of massive deficits, and you could see the major classic M top that formed in there. We called that one out. Now again, you can see that as many patterns are, this is 2 weeks into this advance, and if you follow the cyclical patterns, you could see bullish pattern right in here, right, and a bullish pattern right in here. So they rise for a long period of time, and then they fall for a short period of time. You see that one right there? Beautiful cyclic patterns. This one misses the high and then breaks the low. That means it's finished, and that declared that top in place, and then fell right through this perfect timing and then rallied. So that's an example of the value of cycle analysis. Please become a level 4 member and get our charts. So here is the sell zone in here. Why is that a sell zone? Well, based on our what we call swing high, swing low analysis, we create zones. In other words, that it's the most likely that a stock in a negative formation will fail from, or most likely in a positive formation will dip into. So in other words, in this case, it's a sell zone, and that says to us that, well, we're entering into it right now. You can see we're projecting up until through August it will still advance, but that this will likely stop it on the upside. And we think that you can be trading on the short side based on it getting into this zone. So this is overall a long-term really bad pattern. You notice those arrows in there, and that shows you the positive cycles and how each positive cycle gets you another positive cycle until there's a negative cycle, and then each negative cycle usually gets you another one. So that's why we think it's shortable in that zone. Lockheed Martin up 5% on the week on analysts upgrading their targets in here, and I think they're wrong, and I think the stock is a sell. That is the best stocks that we have for you this week, and we're going to be right back and show you the worst. All right, thank you. Here we are in the worst stocks for the week. We're going to start out by looking at Broadcom. You might call it Avago, AVGO. It's the old Broadcom symbol. Was BRCM, and it's now AVGO. So we were looking at Broadcom and saying a major top was likely forming in here. We saw the Head & Shoulders top forming, and then news came out that they were buying CA, and analysts hated the price that they were paying for that stock. And because the pattern was so risky, I mean, it got annihilated. The stock had a huge drop on the day of that news, and here you could see a perfect Head & Shoulders top that formed. You know, I say perfect. It's always a little prettier when the slope of the neckline is up, because it's easier to break the neckline, and it doesn't take that much energy to break the neckline. And this is very interesting because it's got kind of a compound shoulders built in there, and you can see in here this is your cycle that was bullish, and here's the cycle that turned negative right in here, and we warn when that happens that the next cycle will likely be negative, and there you get it right over there. So that is a really bad looking pattern, and we think it's done for a long period of time. It's very likely that the next pattern, which if I highlight this, will tell you that it goes out to, if I can get it to work, out to the end of December. So that means that a bounce, which is likely coming, is likely to fail. Well, once we have an anchor point, we'll put a sell zone in there. We don't have it right now. The Head & Shoulders measurement is down here under 160. And we would not be surprised to see it get under 160. We've had this pattern in there for a long period of time. You can see actually that we're showing the dominant cycle patterns and the minor cycle patterns as they are highlighted right up in here in the dark black line or the dashed line. And that is a clear look at the beauty of understanding cycle patterns, and that this stock was in a lot of trouble, and there you get that big break. We've been negative, and certainly that was correct. The next stocks we're going to look at are in the silver category. I told you we did this video on materials and silver and golds and what it means for interest rates. And here is AG. This one on our list of best stocks for the year, and it's certainly done well, moving up. Struggling at the beginning of the year, but now up some 20% or better on the year, even with that big decline. Now, that big decline, which is essentially a dark cloud cover, says that, you know, this is where the trouble starts for this stock. So if I were long AG, I would look for an exit in here, especially based on what I see in silver and gold patterns. This is a horrible pattern. Now this has our colored phasing in there. The green zones are positive, the yellow zones are corrective, the red zones are negative with a lot of downward risk when you get in the red zone. And that's where you are right now. So we have the projection in here kind of modest on the downside. It's likely going to be worse than this. As you could see, this rally phase in here aborted very early and got beneath that support. And that says that all this time period out over here has got a lot of downside risk. And I'm telling you, that matches what we're seeing in the silver patterns. So that's a bad-looking stock in PAAS, and I would be a seller in there if I own the stock. FCX, the next one we're going to look at. This one is rolling over from the resistance zone. Now you can see this nesting area right over here. When you get that, it's usually an area where there is hard decline, where there's really some downside risk, and that's what we have over the next month. It's getting into the intermediate support, but I think it's headed under $15. I don't have it projected that low, but it certainly could be testing this low right over here, which was under $15 in the next month. So this is a bad pattern. It fails twice from that resistance zone. It's gotten into this little intermediate support zone. I don't think it's going to hold. And again, that is a bad pattern. Gold Corp, GG, and Rand Gold, GOLD, both down 5% on the week. The same thing as FCX, down 5% on the week. FCX is copper and gold. That pattern just illustrates a failure, and of course copper in a huge failure. Next couple stocks we're going to look at are in the retail category. Gap Stores down 6%, Dillard's down about 5%. So here is Gap Stores. This is a bad failure. Now, normally when you get, again, this negative configuration, see, this was bullish, and it says that the probability of exceeding this high is over 70%, and you easily did that. Once you came down and broke the support in here, it's negative, and it says you're likely to continue on the downside through this timing. It did that, got your rally in here, and now rolling over short of this high, not by much. It did well to get that far up, but now breaking supports and coming down to the 78.6% with all of this time to go, 6-7 weeks on the downside. This is a bad pattern, and you can look for more on the downside in here. We warned that the retail stocks had not corrected, and they were likely to, and that patterns were suggestive that they would get down to their 13-week moving averages. And you could see the top that formed in here in Dillard's, down 5% on the week, and we think it's over with in here. Now, the 34-week moving average, it gets touched in every single cycle that you can see in here. So you can see that here it broke underneath it and then came back to it. Here it went way above it and came back to it. Here it went way above it and came back to it. And here it went way above it, rolled over, and it's coming up like right over here. So you can see that. So this stock is trading at 86. We expect it to fall to between 80 and 85 or so. I'm sorry, between 80 and $82, which are coming up right over here in this period. And of course, it could be even worse than that. So Dillard's, were it to get an uptick in here, we believe this is an important top that's formed, and we would be a seller in there. So that is a look at the retail and a look at the worst stocks of the week. What I'd like you to do is I'd like you to make sure that you follow me on Twitter at askSlim. And if you like our charts and you like that we put this up on YouTube, well, give us a thumbs up there, and of course become a subscriber on YouTube. What comes next? Well, basically what we show you is our short-term view for the coming week, and that's coming right up. All right, you got a little peek at all of our services. You have questions, write me Slim at askSlim.com, coaching, hedge fund consulting, all of our premium products out there. And we keep really increasing the products that we have, all of those services. In fact, we've got some upgrades coming to the stock index report, which is included in all of our premium memberships that you're really going to like. So lots of great stuff out there. You want to get our charts, our rankings and setups, or our videos and the stock index report, write me for these half-price trials. You're a hedge fund manager and you have other people that are managers or yourself that go into slumps or struggling, then I can help you with that also. And of course, I have several coaching programs. So write me at slim at askSlim.com. All right, short-term view for the coming week, taking accounting of how we did in the previous week. You know, for the last month, we've been hovering in the 60 to 80%. It's been really good. We missed the stock market a couple times, and that's maybe been the area that's been most weak. This week, we're only going to give ourselves a 35%. Overall, as I said in the beginning of the show, the dollar mostly affected a lot of our analysis in that it got stronger sooner than we expected. The intermediate pattern looking like it's turned up again. And the metals markets might have to deal with a very strong dollar still for maybe the next couple of months. So we see some pretty good upside potential in there. And that did affect our analysis this week. But starting out, we're going to look at light crude, which was pretty spot on in what we expected. And thank you for those people that wrote to us and let us know that you did really well on that trade. So this is light crude. So you could see in here there are cyclical patterns at the bottom, the ideal cycles, and the top, how they really resolve themselves. And we pointed out that we expected that this next rally right here was topping, and you could see that evening star pattern right in there that we highlighted. And then you had this big down day when it appears that Saudi Arabia is pumping plenty of oil, and now this came down. So you could see that pattern as the dotted lines illustrate that. So what does it show? It shows that, well, if we're right that this is a top, then it's pretty likely that, well, this is a left shoulder and this is a head, and you still have a right shoulder to form. So we'd expect it to fall for a couple days this week and then rally but not get very far. So we're going to look for a couple days down, move up. We're going to look for a test on this low area of the intermediate supports. We've moved that over from the weekly. 69.30, 69.40. We'll probably get a test down there and then get a bounce. So we're going to call it a small week. Momentum in here is still positive. How you can see the volume bars are green down here. That helps you see that. And that is looking like it's failing. It doesn't look like it's going to hold that upward momentum anymore. And then when the upward momentum fails, there is risk. So you can see right here where the upward momentum failed. And you can see that, well, it went into a period of problems. So that's why we don't think there's, you know, much on the upside in here. Maybe you build some kind of a right shoulder and then turn down. And we do think that this is a very important top in the oil market. Next one we're going to look at is the dollar. That's $ DXY. And let me just switch this out to 2 years because I just want to make sure we have all of the proper alignments there. There we go. So the what we're looking for was this, see this big dominant cycle pattern right there as causing a downside movement that we thought was going to last into this coming week and then get the bottom. But it actually looks like it bottomed already to us, and we've got this upward move, and that's likely to keep going. Momentum, which had neutralized for just a few days, has now turned upward again, and there's just a high odds that the correction is over in here, and we're now moving up as our projection shows. And we could get some choppy fluctuations in here, but basically we think that it's going to test this high at 95.50, that area up there. That's the most likely occurrence. It would have to come down here and break this low at 93.70 in order to abort this positive pattern. We don't think that's very likely. We think it's more likely it's going to test and take out the high at around 95.50. So, positive look, and we're going to look for somewhat of an up week there in the dollar. /6E, it hasn't quite taken on the negative character we would expect. We are looking for a down week in here, and momentum in here is neutral. It's really not giving us anything at all, but we would expect a downward test down to this 116 to 115.70 area. If it breaks 115.70, right around this low, 115.80-ish or so, that would be a pretty negative sign, because that would break down the intermediate pattern, and that would then enhance what we believe about the dollar moving up. So we're going to look for a minor decline this week, but risks actually really building in the euro currency as we get this stronger upside move. Gold market, we expected that what it was going to do was going to come up into this zone up here and fail, and that it would decline, and then we'd get another bounce to the upside. So it actually took on a weaker character in there. It didn't quite get the bounce to the zone, so we lose it. We get dinged on that one. And we actually thought that it would be an up week based on the fact that it would fail from there, but would have gotten a little higher. So this just took on a weaker character. We think that it could bounce. Now the slim ribbon coming down, and see the negative momentum in here, is really the resistance. And we're going to look for it to try to trade up into it, maybe up to about 12.54. We see a small week in here, but risks certainly to the downside as this momentum is negative, and the dollar is certainly looking like it's positive. So this area held. I mean, it tried to just tick under it. So maybe we get back up into the slim ribbon and then roll over again. You can see out in the next few weeks in here that we're projecting actually quite a bit lower prices out there. So we tell you more about that in the video that we did on Thursday. So that's a look at a very weak gold market. We're going to look for minor attempts on the upside and then failures again. /ZB. This one we expected it to get up to 46.10 or a little bit higher. It got up over here to let me just get the 5 days up there. It only got up to about 45.28, so it wasn't that good, and now you can see it's trying to come up there again. So this is a market that looks to us like it's still positive. You see the positive momentum in here. So it might still try to make a little upside ground in here in the next couple days, but then we see it getting into a little corrective period before it then moves up again. So we would expect that we're going to see an attempt at the bottom of this slim ribbon at the supports sometime late in the week or the beginning of next week, testing 144.24 to 144.14. This support here is 124.14, and 124.44 is kind of the bottom of this slim ribbon. So you can see we're really looking at what we think is a minor little corrective period in here, and then we have been looking for lower interest rates for an extended period of time that we talk about in that member video, and I think that that would be some important information for you to take a peek at. So for this coming week, we're going to look for a slight upside, and we'll call it narrow range, really not getting above that 146.10, and then really not getting below this area of 144.14. So kind of that range that we're looking for right in there. So this is like the top of the range right over here, and here's the bottom of the range right over there, and we think we're going to be stuck in there right now. That's probably going to be an opportunity to sell some premium in there. If you have that kind of a range defined, and then you know where to maneuver out of. And of course, the last thing we're going to look at is the stock market. So the stock market, we said that we thought it was going to have one more move to the downside to complete the downside overall corrective period and then move up. On our weekly charts, we warned, and we sent this out to our members, that it really looked like the corrective period had ended, and that there was a probability that we were a little bit early on that, but it was going to then put us into a more favorable period for the stock market. And as we said in the beginning of the show, we believe that we are in there right now. So let's take a look here as we look at the S&P 500 SPX on the daily chart. And you can see this really busy chart, and you will see that we can identify the cyclic rhythms that are in here. And what we had expected was that this period right in here was going to bring the last of the corrections. You can see that we thought that the next low was 722 to 726. This is now 713. However, the shape and patterns of the intermediate chart say that it's likely that we have seen the worst of it on the downside. We're getting up to these Fibonacci areas where it failed from before and now moving through it. So that's all very strong. We had this abandoned baby right over here, which generally would be a market a point to realize that there would be a top, and it's now moved up through it. So when you get these signals that don't work, you can really get a sense for the strength that we're seeing. However, based on the patterns in here, you can see that we're in like right over here, or right over here, where these nested cycles come in right over here. This is the NASDAQ and the Russell, this is the Dow, this is the S&P. So again, that period that we're looking at, 722 to 726, is in the next 5 to 8 trading sessions. So that says that we're likely to get into this little corrective period. We're going to call for this area to give it some problems and for it to be a kind of curling over weekend here, as you can see, maybe a little higher and then come down. And we're going to look for a test of supports in here. The minor number right over here, that minor 23, let's just get a closer look for you right in here. That minor 23% fib right there is at around 27.79. We think that's likely it's going to get there and break it. These minor rising supports right over here at around 27.60, that is really maybe a little bit more of a likelihood of where it trades down to in this little minor corrective period. I want you to note that momentum now has established back to the upside right there. And that, again, is likely to give continued support to the market. So slim ribbon right in here, also some sense of support. So this area between 27.60, 27.79 really looks like the area that it will dip down into in some minor pullback. But then again, you get into this stronger period again after that, and we really think that the odds are growing that we're going to see a test sometime in, we're going to say, August, of the 2872 number on the upside in the S&P 500. And how it acts around that area will be pretty significant for us. So the next week and a half, we're going to look for a minor corrective period in the stock market in what really looks like an upward resumption to us as we take on what is our first bullish stance in the market in quite a while. That decline, that corrective period, the period of high risk that we talked about, only brings 100 points in the S&P on the downside. And when you do that, it sets up a continued upward trend, and we have to be agnostic. We have to say bullish or bearish. Whatever the charts say, well, that's what we're going to believe. So that is a look at the short-term view for the coming week. We hope there's been some great information for you, and the end of the show. Make sure you write me at slim@askSlim.com if you want any information on any of our services that you saw there or trials on any of our premium memberships. Be glad to send those to you. And I want you to be really careful because it is so crazy out there, and we're always wishing you great trading.